All right, so here we are on 1 hour time frame of XAU versus US dollar. Long-term scenario for gold has not changed because geopolitical tensions remain the same. When I say geopolitical tensions, I mean two very specific things. One is ongoing Russia-Ukraine war, and a real peaceful solution has not been reached yet, despite so many efforts, so many negotiations among the world leaders. Second is the trade war, or you can say tariff war, which was started by Trump and then it continued as the retaliatory tariffs have been imposed by other countries onto the US. So this scenario actually keeps gold afloat because gold is now uh, the best safe haven, as we have said many, many times. And the status of gold as the number one safe haven is not going to change unless these scenarios will change. So, what we are going to talk about today, it has reached a psychological level of 3,000, and then there was a minor pullback. The question today is this minor pullback sufficient to enter buy positions now? Or should we look for any sell trading opportunity? Or should we simply wait for a downward correction and then we enter the buy? So let's discuss in detail. If we look at this behavior of the gold, it can pull back easily to 29.50. So I would like to see the price action to understand whether waiting until 29.50 and then buying is the best idea, or we can go against the prevailing major trend and we can take the sell position. Taking sell position against a trend is not always suggested. However, it can retrace to 29.50. So we can target 29.50 area, but we are not going to buy right now. I'm not very confident right now, having seen the current price action after market open. So you can see price development after today opening is very small and it is still moving to the upside. And you never know what's going to happen after such kind of consolidation. For example, look at here. This was a consolidation around a psychological level, which was 2,900, or you can say 2,900. And then price continued to the upside, it broke to the upside. Similarly, when price returned from 3,000, it may break right to the upside because market is crazily bullish about gold now. And it's not just retail traders like uh, people trading on MetaTrader. Even the biggest economies in the world are buying gold as safe haven. For example, you can see the uh, recent news about Iran buying gold. So it's like buying spree of gold going on in all over the world, not just by the traders who trade on MT4 or MT5, because they contribute very small supply or demand in any trading, because most of buy and sells are offset by the banks when the trades are sent to the liquidity provider. The actual demands are created by other big institutional traders who run hedge fund or mutual fund companies, or or when countries start buying something like that for their own safe haven. Uh, so point is, we do not know what's going to happen, and we certainly shouldn't be in rush to jump to a conclusion, let's buy right now or let's sell right now. No, 29.50 is a psychological level for correction. And what price action I understood here is a probable formation of head and shoulder. So this can be the left shoulder, it looks like left shoulder, or we can totally think of this as the left shoulder, this whole thing. And then this is the right shoulder. This is the head, and when it will come down, this will be neckline around 29.80. So right below 29.80, we can take a sell position, or you can even set a sell stop order. I rather suggest not to set any sell stop order because sometimes a market can come and make a spike, and your sell stop order will be hit, and then it can reverse to the upside, just like what happened here. See, this spike came down here below 2,900, and then it went to the upside. So the people who just uh, used this sell stop, their sell orders were executed, and then it went to the upside. So of course it was a losing scenario. So rather than doing this, I at least would like to see a candle closing below 29.80, 1 hour candle at least, and then we will enter sell position and we will target 29.50. Even if we enter at 29.70, we will still have sufficient room to the downside, and we will have sufficient reward. Even from 29.75 or 29.70, this will be our reward, which is a nice reward. And as far as the risk is concerned, we are not entering right now. So if this will break and then we will enter, then our risk is going to be like this. We'll have to set a stop loss above this point. So right now, let's wait and watch and see where it goes. This is for this probable sell trade, which may or may not happen because it's totally going to depend whether this neckline will be broken and 1 hour candle will close below it or not. But market may go to maybe 3,000. If this doesn't happen, it may go to 3,000. 10, 3,020. Nobody can say where exactly will it return from and from where exactly it will start retracing significantly to the downside. But we, of course, can understand that a significant retracement to the downside will take place, even if it is supposed to continue to the upside. So for any other scenario, we will have to look at the price development. Also, we'll have to keep an eye on the upcoming market news, especially about this trade war or tariff war, and also any development for this peacemaking for this Russia-Ukraine war. So, if peace will be established, that will be bearish for gold versus dollar. If there is no peace, trade war, and this Russia-Ukraine war both are going on, it will keep gold bullish. This is a simple thing. That's why once it returns to the downside, even I'm not suggesting that you go set buy limit order at 29.50 and simply just forget it. I don't suggest this because even if it returns right from this point or maybe from 3,010, 3,020, we will wait for this to fall down, then make a consolidation. Maybe it will come down and it will consolidate just like this, and then it will again continue to the upside, making some sort of candle pattern or chart pattern, which will give us a bullish price action, a confirmed bullish price action. We're not talking about the very basic things like candle pattern or chart pattern here, but the only way to understand price action is to understand the patterns, right? So we will wait for the pattern to be formed, and then once, for example, it falls down, then it makes some kind of pattern here which confirms bullish price action, and then we enter buy. This will be the further plan. So these are all the plans related to gold today. Thanks for watching.